All right, good morning, everyone. Just wanted to check the lights to be sure it's okay.
Yes, good
Yes.
morning. Good
Good
morning.
morning. I see that you have a screen that you want us to use.
Yes, that wasn't shared to you. Oh, can I quickly mail it to you?
Okay.
Thank you. I'll go on.
All right. Thank you, Safina, and
Yes,
cheers. See you.
I'll share it now.
Oh, please, can you hear me? Can you confirm that the lighting is okay for me?
Yes, Onome, we can hear you.
And for, is the lighting okay for all of us? Just to
Yeah, okay,
confirm.
Yes, sir. I can see everyone. Good morning, everyone. Okay, yes, Chinwe, I can confirm the lighting is good also. Thank you.
Thank you.
Sefina, I'll hand over to Sefina now.
Ogo, is my lighting also good?
Yes, it is. It is.
Thank you. So I think we are starting in 5 minutes. So we'll just wait for the next 5 minutes. Then I'll start. Thank you.
Can anyone hear me? Can anyone hear me?
Yes, we can hear you, Mr. Jumale. Good morning. We can hear you.
No.
Good morning, sir.
Okay, I reckon everyone can hear me now. Yes?
Yes. Yes, we can hear you.
Yes, we can.
Good morning, Sefina. How are you doing?
I'm very well, thank you. Good morning.
Chinwe, how's it
Good morning,
going?
sir. Good morning, sir. I'm fine, thank you.
Good morning, Executive Commissioner. Good morning.
Good morning, everyone.
Good morning.
MDs, good morning. MDs, good
Good
morning.
morning. Good morning.
Good morning.
So are we starting on time?
Yeah, so just a minute more, then we'll start. So it's 10 o'clock on the dot. Good morning, distinguished ladies and gentlemen. On behalf of the T+2 Markets Implementation Committee and CSES PLC, I warmly welcome you to today's webinar session, Advancing Market Efficiency through T+2.
Recording in progress.
My name is Sefina Akinebagbe, and I have the pleasure of serving as your anchor for today's session. As many of us know, T+2 settlement is a major step forward in aligning Nigeria's capital market with global best practice, enhancing efficiency, investor confidence, and market competitiveness. Before we begin, let me share a few housekeeping notes. Today's webinar will run until 11:35 a.m. Apart from our speakers, all attendees will remain on mute throughout the presentations to avoid background interruptions. Please make use of the Q&A or chat box for your comments and questions. We'll take them during the interactive session. The session is being streamed live on the CSES YouTube channel, and the full recording will also be available after the event. Now, here's today's agenda flow. We'll start with welcome address, opening remarks, then followed by technical presentations, where we'll hear from our engaging lineup of thought leaders who will walk us through perspectives on market readiness, implication for exchanges, OTC market view of the transition. Then we follow with interactive question and answer and stakeholder engagement. Then closing remarks. We are honored to have such excellent lineup of leaders and regulators with us today, and I will be guiding us through each segment. Ladies and gentlemen, to officially welcome us and set the stage for today's discussions, please join me in welcoming Mr. Adeyinka Shuneko, Executive Director of CSES PLC, who is representing Mr. Aruna Jallo Waziri, the MD CEO of CSES PLC. Thank you, Mr. Shuneko. Over to you. Mr. Shuneko, is it there? Please, can you hear me? Can anyone hear me, please?
Yes, we can, Sefina. Yes,
We
we
can
can.
hear
We
you.
can,
Mr. Shuneko hasn't joined.
Oh, okay. So while we're waiting for Mr. Shuneko, then we can move to Mr. Jumole. So it is my pleasure to invite Mr. Ajumale, Executive Commissioner of Operations at the Security and Exchange Commission, who is representing the Director General, Dr. Agama, to deliver the opening remarks on SEC vision for market transformation. Over to you, Mr. Ajumale. Thank you.
Thank you, Safina, and good morning, ladies and gentlemen, and movers and shakers of the Nigerian capital market, and all other stakeholders. I bring you greetings from the Director General of the Securities and Exchange Commission and all my colleagues here in Abuja. He sends his warm regards and a reminder that we're going through a time of transition, and we aim to get quite a few reforms done in the markets. And with your help, we will get it done. And we mean we'll get it done even before the end of this year. Remember, we've been on a 10-year journey with the master plan. This is one of the crowning opportunities that we saw 10 years ago when we said we're going to change the market. And we're now getting to the end of it. And before we even finish As we close out the master plan, the revised master plan, this is one of the objectives that we want to hit, and we want to hit it running and hit it right. Closure date for this is planned for November. Indeed, a certain date has been fixed for it, which is the 28th of November. So it's not a maybe, it's already like fixed into our calendars, and we know that we can get it done. It's taken quite a lot of thought, a lot of consultation, a lot of planning, a lot of testing to get us to this stage. A lot of scenarios have been examined. A lot of scenarios have been examined. A lot of other jurisdictions have been reviewed to get to this stage. We didn't just sit down and think it up that, yeah, it would be good. We were actually at one point looking at T+0, then T+1, but we think the least disruptive and the most practical way of going about this is to start with a move to T+2 from T+3. Indeed, even doing that alone moves us ahead of quite a few other capital markets and quite a few of these other economies that we look at, and we say they are, in quote, developed economies. So we're actually moving ahead very quickly, and we're reforming not only the capital market, but the economy as a whole. I would also add that obviously it's not just because we want to get that additional mark that we've done it, but it has some very clear advantages. It reduces counterparty risk. It allows for quicker access to liquidity. It allows our capital to work harder and work faster. It aligns with global markets. And I think in general, investors will sleep better at night if they know that there's 24 hours off their normal wait time. So we've signed up this transition. We are happy to see the market working towards it as well. I would like to assure everyone that you have our full support in terms of testing the operationalization of this, and that's a pretty long word, but a very necessary one. We'll work towards making sure this works, and we're ready to support in every single manner possible. Indeed, if there are any changes that need to be made, if there are new rules that need to be put in place, or new operations that need to be set up, the SEC, our door is open for communication, consultation, and really everyone coming together to work on it. So I would encourage brokers, dealers, custodians, registrars, issuing houses, all the players in the market, please do your internal checks, stress test your systems, tie up your loose ends. Also become advocates with your clients, with your clients, be they retail or corporate or international or local. Sensitize them already that this move is coming. And I would end just by congratulating the CSCS and thanking the CSS for spearheading this. We are fully behind you all. And I'll just finish on the sentence that if we do collaborate, it will be a seamless move to T+2. It will be something that we can then advance to a T+1, possibly sometime in the middle of next year. So as we gather today, I wish you happy deliberations, and I wish you very fruitful thought processes. And at the end of the day, we shall mark another accolade in this capital market. So thank you very much, everyone. And I'll sign out on that note. Thank you.
Thank you so much, Mr. Ajimole, for that inspiring perspective and for outlining the regulatory vision that will guide this important transition. We'll now turn to hear from CSCS PLC. Please join me in welcoming Mr. Adeyinka Shuneko, Executive Director at CSCS PLC, who will be delivering the welcome address on behalf of the Managing Director, CEO, Mr. Haruna Jallo Waziri. Thank you.
Safina, good morning, and good morning to everyone, and good morning to our Executive Commissioner, Mr. Ajimole. Thank you, everyone, for joining us this morning. Let me, on behalf of our amiable CEO, Haruna Jallo Waziri, I'm delighted to welcome you up to this important webinar on the planned reduction of the settlement cycle for the Nigerian equities market. Unfortunately, Jalo cannot be here with us this morning, but he has asked that we have a fruitful deliberation this morning. So in terms of the origins of the initiative, this journey to shorten the settlement cycle started with CSCS and other participants with the mandate to enhance liquidity and efficiency in the Nigerian capital market. We all recognize the importance of global competitiveness. And so the SEC, as Mr. Ajomale has also mentioned, was engaged and has led this transformation of a market-wide committee that has led to this transformation of to T+2 and eventually T+1. The committee comprised mainly of key stakeholders across the market ecosystem, and they were tasked with benchmarking global best practices around the world, evaluating risk and stakeholder impacts, and recommending for an optimal path for our market to achieve the reduction in the settlement cycle. Their work started with a comprehensive report, which recommended a shift from T+3, where we are now, to T+2, and eventually to T+1. The SEC eventually approved this transition and has mandated that we should move to T+2 by November 2025 and in April 2026 to T+1. And this has marked a pivotal step forward for all of us in the market. To ensure this smooth adoption, various subcommittees have been set up by the committee that's driven this, and mainly to establish and to amend the rules and processes that need for us to move to this reduction in cycle, and to conduct gap analysis for all stakeholders, undertake rigorous testing, and drive stakeholder engagement. This transaction aligns Nigeria's capital market with global standards when we move to T+2. It also strengthens our market liquidity and reduces counterparty risk and enhances investor confidence ultimately. It positions our market to better attract and retain both domestic and internal capital. I wish again to commend the SEC, all our market participants, and all our stakeholders who have contributed to this journey. Today's session is an opportunity to deepen our shared understanding of this transition and address practical questions and collectively prepare for its successful implementation. Together, we are building a more resilient, efficient, and globally competitive capital market. I thank you all for joining us, and I look forward to a fruitful discussion ahead. Thank you, everyone.
Thank you very much, Mr. Shuneko, for that insightful welcome and for positioning today's conversation so clearly. Now we'll move to our first technical presentation for the day. Our first technical presentation will focus on market infrastructure, readiness, and exchange collaboration. Please join me in welcoming Mr. Jude Chiemeka, CEO of NGX Limited.
Good morning, everyone. Thank you, Sefina. If you let me share my screen.
Please go ahead.
Please, can you confirm you can see my screen?
Not yet. We're not seeing the presentation.
Okay, just give me a minute. Can you see my screen now?
Yes, we can. But if you can put it on the presentation format, that will help it. Yeah.
All right, so we just have a few minutes to run through 10 slides. So what I will not do is to go through all the slides in details. What I will do is to ensure that we share the slides post this engagement, so you can always reference the slides and just touch on the key areas of the presentation in readiness for a T+2 settlement cycle. Just from an infrastructure perspective, if you think about the exchange, our current settlement system for our equities transaction is a T+3, And as articulated by the Honorable Commissioner, the set date for transitioning to a T+2 has already been set. This is just to provide an update as to what we have done from an infrastructure perspective, just to ensure we're ready to be able to do and move that transition very swiftly. If you think about our market, it's been trending up, and in terms of performance, it's really done remarkably well at performing most of the other markets would typically benchmark performance. As a multi-asset exchange, our exchange market cap transcends beyond the equities market cap, which is currently at 140.3 trillion naira, and comprising of the equities market, the fixed income market, and the ETF market. It's important to point out that aspect of our infrastructure because we currently trade fixed income on a T+2 settlement cycle. So moving to a T+2 settlement cycle for our equities is pretty much in line with infrastructure that the exchange has in place. So the transition cycle obviously starts from the operational part of our trading. We have market intermediaries, the trading license holders, who typically do all these transactions, and will obviously be engaging along those lines to ensure that they are also well equipped to navigate this transition. What is important here is really the transitioning from a T+3 to a T+2 is something that has already been embedded in the capital market plan as we aim to internationalize our exchange and also the capital market in line with global best practices. So the market infrastructure readiness, we currently use the SGen, and that is a world-class market infrastructure, the NASDAQ supported trading system that we utilize, and that is able to accommodate several asset classes. Like I said, as a multi-asset exchange, we're able to trade our equities, we're able to trade our fixed income, as well as ETFs, and more recently, derivatives on this platform. And so from an infrastructure perspective, the NGS does have a world-class trading infrastructure that can easily migrate to a T+2 configuration for the market intermediaries that utilize our market, and also on the online access for retail clients and all the clients that utilize the sponsored assets, they're able to also migrate and configure settlement in a seamless manner to ensure that during the post-trade integration, all that is required to be done within the T+2 window is effectively accommodated. The role of an exchange-led collaboration, clearly, what we're doing here is really a united front. The exchange does not operate in isolation. We're part of the market ecosystem, and even from the initial conversation of the SEC, it is clear that this is a collaborative effort. Clearly, the CSCS is the clearing and settlement arm of the ecosystem. And from an exchange perspective, we work with the Action, who are really the Association of Trading License Holders within the Securities Dealing Houses of Nigeria, and the registrars as well as the custodians who, as you're aware, trade for our mostly our international clients, and they represent about 30% of total value of trades that have been done year to date. And so all that is required has already been done. This engagement has been ongoing and has been finally completed. This is just to now inform the market of the readiness of all the key collaborators in ensuring that we'll have this T+3 movement to a T+2 settlement system. Everyone is being carried along. So preparing for operations for success, I mean, the key element here remains that from an NGS perspective, there are different windows and different channels, touch points that you can reach us. We have a dedicated contact center, and that is live, and you can always reach the NGX at any point in time if there's any need. We'll also be circulating frequently asked questions just to provide better clarity, especially from an investor's perspective of what this means and how you trade and settle your transactions on our platform. What does this imply? What is the expected impact? The impact is positive, largely positive, from a risk management perspective to enhance market efficiency and liquidity. If you think that we trade over $11 million a day now, we'll expect we'll start trading more as we shorten the settlement cycle. And we also think that it will help boost investors' confidence, and the market will be able to allow better management of liquidity and enhanced participation in our market. And lastly, this really aligns with global best practices, and as the exchange and the capital market continues to strive to create a world-class enabling environment, excuse me, and as the macro continues to improve, you will certainly be seeing a lot more participation, especially as we are very active around the African Securities Exchanges Association, where clients can easily trade other African markets. And if you think about other African markets, some are already trading along this line. So it just makes for a better international outlay for our capital markets. So in conclusion, how do we build a future-ready market? This can be done together. Just to reiterate what the commissioner said, it's a collaborative effort, and we must commend the efforts of the CSCS for championing this as the key market ecosystem responsible for clearing and settlement. T+2.
We hear about OTC and NASD's readiness. Please join me in welcoming Mrs. Chukwuemeka Eke, Head of Operations and IT at NASD PLC, who is representing Mr. Lunge, MD CEO of NASD PLC. Thank you. Ms. Eke, over to you.
Okay. Good morning, everyone. Ogo, please, can you please put up the slides, if you can?
Please, participants, don't forget to drop questions and answers in the Q&A section, chat box, please. Thank you.
Okay. Thank you, Ogo. Good morning, Executive Commissioner, CEOs, distinguished ladies and gentlemen, all protocols duly observed. My name is Chiwendu. I have the honor of representing my MD, Mr. Longe Egwahide, the Managing Director of NASD OTC Securities Exchange, who is on an official event, but could not be here today. Today I'll be speaking on the OTC's market readiness for a shorter trading settlement cycle, highlighting what this transition would mean for the market of unlisted securities. So my slide would provide you with, please, the previous slide, please. My slide will provide you with an overview of what the settlement cycle is, what the change will be for the unlisted market securities, and then speak to the readiness, to our readiness from the perspective of infrastructure, market participants, regulations. And then I'll summarize with a highlight of what will not change from our perspective and what will change as we transition. Next slide, please. Okay. The capital market, as we know, is a critical driver of economic growth. What it does is to provide companies with access to funding, investors with opportunities to build wealth, and the government, as usual, with a platform to mobilize resources for development. However, the effectiveness of this market really depends on one factor, which is the efficiency and reliability of trade settlement. I'll ride on what the previous speakers have said. We just know that settlement cycle is the time really between when trade execution and the final transfer of security and funds. As the speakers have said, is a collaborative effort. And what it means is that the whole market is transitioning from a T+3 settlement cycle to a T+2 settlement cycle as approved and by our regulator, which is the SEC. So what really would a shorter settlement cycle mean for us? It means that we'll have faster settlement, reduced systematic and counterparty risk, enhanced investor trust, improved liquidity, capital efficiency. Also, it also aligns our capital market to global standards on trades and settlement. So I'll just move quickly to how NASD is ready, collaborating with others on the move to T+2. Please, next slide. Thank you. As our previous speaker has said, we're all working in a close partnership to make sure that our market is also ready for the T+2 settlement cycle. We've also made the required investments in system upgrades, following the structured work that has been ongoing, and we've strengthened our technology, our infrastructure to enhance trade capture and the associated confirmation processes. This is to ensure that we have a smooth transition come in November 2025. From the market participant perspective, we've also worked with the CSCS and other stakeholders. We've carried out the required system process testing procedures to ensure that all our operations and trading efficiency is assured by November. We've also gone ahead to carry out a number of capacity buildings initiative, which includes trainings for our broker community, as well as all required sensitization efforts. So from the regulatory perspective, our current rule suffices in collaboration with other stakeholders as well. We're also we have harmonized our rules and our process frameworks to ensure that we all have a smooth transition with the market. So what exactly is the market implication for the unlisted market? As I've mentioned, it's important for us at NASD because in terms of liquidity management, operational efficiency, and investor confidence. For investors in the unlisted market, a shorter cycle typically means that proceeds from sales and deliveries of securities will be available much sooner to them. This has a dual effect of enhancing market liquidity and making our OTC market more attractive to both retail and institutional investors. Please, next slide. So on my last slide, I'll just run you through what to expect, what will not change, and what will change from our own perspective. So our access to our markets will not change. We'll still remain on our existing channels, which includes our web portals, our secured web portals, the NASD mobile app for investor trading, and then we have our various API connection as well. Our trading times will still remain, so that is not changing. Also, our rules is also not changing. So really, what is actually going to change from our perspective is just that you receive your funds and your securities much more sooner, which is by T+2. So in closing, in terms of system readiness, NASD's platform and processes is ready and synchronized with the CSCS and other stakeholders to ensure seamless settlement under the new cycle. Now, from an operational perspective, to our market operators on the OTC unlisted market, it will just require that they strengthen their systems and processes around trade confirmation, documentation, and fund availability. At NASD, our commitment is very clear, is to work collaboratively with all the stakeholders, CSCS and the registrars and others, regulator and the investors to ensure that we have a seamless transition in November. On behalf of my MD, I thank the SEC for leading this initiative, the CSCS coordinating this, and the organizers of the webinar for this opportunity. And I thank you all for your attention. Thank you.
Thank you, Mrs. Eke, for sharing those very practical insights into the OTC market implications. Thank you. Now we move to the next speaker, which will share perspective on T+2 transition, implication for commodities market. Please welcome Mr. Akinshola Akeredolu-Ale, the MD CEO of Lagos Commodity and Futures Exchange Limited. Thank you.
Okay, thank you very much. The DG, ably represented by the Executive Commissioner, Mr. Bola Jomale, the CEOs of exchanges, colleagues, ladies and gentlemen, I'd like to stand on the existing protocol. We are very happy that we are coming towards T+2 today. After 30 years of working on T+3, I can remember in the 90s when the Central Securities Clearance System became active, and then we started with T+3. And then we're also very happy that the regulator, the Apex regulator SEC, has kept to their word in alignment with the 10-year capital market master plan in implementing that we should move closer to the global requirements of T+2 and transition to T+1. Ours is a position of a greenfield, which is being built and is being engaged and is being grown and occupies a very, very large role in other economies in Nigeria. We're happy that we're working towards the T+2, which is for November 2025. For that November 2025, we'll discuss our preparedness for that. And we're also very, very happy that we're going to be moving towards transaction plus 1 day by April 2026, which will boost part of the asset classes that we trade on, which by global standards, most of the time require the T+1 position for some asset class, particularly for the gold trading as a commodity and the petroleum liquids as an asset class. Now, we have discussed the issue of why T+3, so I will not deliberate on it too much, but we know that, like I've been mentioned earlier by the speakers, that the global markets are moving towards a shorter settlement cycle. In fact, most of them are in that space, as we show in the next few slides. Some of them are already at T+1, but it's good that we as a country, we're moving towards T+2, and by next year, we're moving towards T+1. And we also know that there are very serious requirements for liquidity needs for us to be able to run on a 48-hour basis. That's T+2, and how it will make things work better and people want to participate. Because time is money, and people know the time value of money. Also, we'll be discussing briefly the issue of the risk reduction on in that particular space, whereby when the transaction cycle is shorter, it makes it easier for people to be able to trade, particularly in the commodity space, to reduce what we call arbitrage, whereby people will be able to enter and exit and then take advantage of the longer transaction settlement cycle. And finally, because in the commodity space, it is a space that the globally acceptable assets. So effectively, when you're trading commodities in any country, you have to be in an alignment with the global positioning, particularly, for example, gold, petroleum liquids. If the transaction cycle for other countries that are trading them real time is T+2 or T+1, then it's also better for us to be aligning our own position towards that. So we want to thank the regulator. We're moving towards T+2, and then of course we'll get to T+1 and very, very quickly. Be aware of global overview for us to just consolidate, and for emphasis sake, we'll just look at 4 exchanges in the world that are in the space of the commodities ecosystem. We'll look at India in one side, we look at London in one side, we look at the United States, Chicago, and New York Mercantile. If you notice for the 4 that are trading in commodities, most of them are T+1 the next business day. And for London Metals Exchange for gold, the exchange clearing houses update traders margin accounts overnight. So the credit and debit reflects on T+1 the next business day, so that people can trade. Because, for example, in gold, gold is almost next to a currency, and people believe that that should be immediate settlement. So we're happy that we're working towards that for April next year. And the Chicago Mercantile that focuses a lot on commodities and agro-commodities also, they move towards a T+1 basis. And for the New York Mercantile that trades and that allows the execution of trades for financial settlements, is closer to overnight transactions with T+1. So we're happy that we're coming towards this, and Nigeria is moving very fast there towards that space. Just for us to see what it will do, and it will enhance for us if we move towards T+2, T+1, because it means that you have larger volume of transactions taking place. People will be able to manage their assets better, and will be able to move from one transaction to the other in a shorter time. For people whereby in the commodity space, the profits are in the margins, and the margins can be very, very thin, to the extent that an overnight position on a particular transaction could cost volumes of money in that space. So when we now start talking about T+2 from T+3, what it does is the value of the time and money that's going to be put in the ecosystem reduces in such a way that to the benefit of the investors. And if you look up there, what we've done is we just did a comparison, and you see that they work hand in hand. And we're very happy that we have a centralized position in Nigeria of a depository being the same, which is the central securities clearing system, serving both the equities market, the commodities market, and the fixed income market. I want to thank them very much for doing this and creating this particular market infrastructure to support the ecosystem. So briefly, if you go back a little bit, briefly, if you look at the market, you'll discover that, for example, United Kingdom in the equities market, you're talking about 3.8 trillion in equities market. And if you go to Hong Kong there, and if you go to United States, you discover that in the United States also you're talking about 3.1 trillion in the commodities space there. Well, the T+ allows people to be able to have more trust, and T+2 have more trust in the market, be able to manage their finances very well, and manage their cost of funds very well. So we're happy to do this, and we're happy that the commodity space is being put into consideration and all this. So if you look at, for example, particularly I'll go to United States, you will discover that the T+1 is what is obtainable there according to global best practice. The ones that are doing T+2, like Japan and Australia, all of them are already trying to move towards T+1 in that ecosystem. So we believe that this movement will support bigger capital transactions, support and protect cost of funds for people to be able to trade, and overnight delivery and settlement of trades. Next slide, please. Now, in the commodities market, what it will do for us immediately in our own ecosystem, in our local balances, we'll know that immediately there's going to be liquidity boost, because there's going to be quicker access to funds for farmers, for miners, for aggregators, for people that are in that particular space, and investors, because one day could make a difference in the revenue for any of these investors. Then the issue of counterparty risk. The counterparty risk, most of it has to do more with assets like gold in the market. People want to buy gold and immediately get delivery of their gold immediately. And when people sell gold also, they want to get their monies almost immediately. So in most environments, they want T+3, they want T+2 or T+1. And in some cases, people want to take delivery immediately, whereby there's no space for counterparty risk at all. And if this is done, it means that investor confidence, particularly for institutions that are international and are foreign, they'll be more willing to participate because they know that there's reduced counterparty risk. And of course, the turnaround time for their transaction is quicker, particularly in locations whereby you have a 24-hour difference in timing from that location to our location. And it also will boost the arrangement for people that want to do intraday trading, whereby on daily trades, they can do proprietary trading, they can do intraday buy the same day and sell the same day. And at the end of the day, if it's T+1, they can immediately, overnight, look at them, the resources that they have to be able to deploy to another space in the commodity space. It's very, very particularly important for the commodity ecosystem because the margins are always very, very slim when it comes to trading. And also, it also makes it easier for price discovery and efficiency, whereby people will not be able to, manage the market, judge the market, and resort to serious arbitrage in the market. It will allow for those traders to be able to manage their funds, their portfolios at any point in time, particularly in some locations where we have FX movements. And then you can make a profit and you have an FX movement that could really affect whatever resources or income you've made in a particular space. So the T+2 or T+1 will make it easier for FX efficiency. And should there be movement in FX space, it does not wipe out the margins. So we are very happy about that. We're hoping that one day, at least for the gold space, we move towards them T+0 because the currency, and most people want to trade and get value almost immediately. For the petroleum liquids that we're working on, maybe T+1. But for the agri space, we are happy that we're doing T+2, and then we have prepared ourselves and we have a structure in place. We started putting the structure in place about 3 years ago to support T+2, and then later T+1. We have been able to install our own technology to support T+2 and to be able to move subsequently to T+1. I want to specifically, out of the way, thank the CSE as a depository for going out of their way in adjusting some of these things to be able to accommodate the commodities ecosystem, because we know that as a greenfield, it's easier for them to establish resources for the equities market, for the fixed income market that are already in the full bloom, but they've gone out of their way to make sure that all these same opportunities are available for the people in the commodities ecosystem there. And then subsequently, we'll be able to start looking at, when we start having T+2 or T+1, the market makers will be able to participate better because they know that immediately they can get their funds back. And also the clearing members that will be participating in that space will realize that they can have a turnaround time of 1 day instead of having to wait 3 days. It's even better, it's a better competition now, because before, when we're issuing them checks, when you issue checks, it used to take about 3 days or 4 days for the checks to clear. Now, even the banks have moved towards next day value now, and then some of them maybe 2 day value. So to make it easier for the banks and the financial institutions to know that the value, whether by way of settlement in the bank system or on the market, is quicker there. And then we're happy that our own trading time will not change. In the market readiness, we have engaged to make sure that in the last 3 years, we worked on operational systems that we've spoken about, liquidity management, regulatory alignment, market education, ease of onboarding, and market makers and clearing members. I'll quickly speak to the issue of regulatory alignment, because anything that we have to do from the angle of the commodity space and it's a greenfield space, we still have to run everything by the regulator first, for them to look at it, to see the risk profile, to see how they risk it, and to make sure that everything that has to do with risk management is done properly in alignment to global best practice. And also for the ones that have to do with things that have to do with the assets like gold, we also make sure that we're engaging with the central bank and all of that settlement banks, which the central security clearing system are made easier through NIPS for trades to settle to the settlement bank to the various traders there in key. Then the other part has to do with market education, has been spoken about, where we've been doing a market education. And then lastly, ease of onboarding. The ease of onboarding has been a major issue, which we are trying to engage, because this is going to create space for people in a particular age bracket, for them to see ease of doing trades in the commodity space, for them to participate. For example, a lot of them are focusing more on cryptocurrencies and tokenization. We're looking at how can we do ease of onboarding and to explain to them that the T+1 that they get in their transaction in those particular space or T+0 is possible also in our own ecosystem here on the market readiness. The next has to do with our role. We have played a key role in the commodity space to make sure that certain policies are in place to support the commodity space. We worked on the ISC 2025 to make sure that commodities definitions were adjusted and that commodities ecosystem starts playing a major role in the financial space. We've done that also in capacity building to make sure that the various stakeholders in the ecosystem, from the brokers to the banks, have been engaged, and particularly global positioning, because a lot of products that have to do with commodities that come from Nigeria go into the global space. We've been able to establish that to make sure that Nigeria is now a commodities hub, particularly in West Africa, and Africa as a Pan-African exchange. We have also engaged further on the dual trades in Africa with the Africa Commodities Exchanges and within this short particular time. These are the things that we have addressed in our own space. We've done market-wide tests and we have done our market technology adjustments in place to be able to participate here. And also we have gotten approvals for our rules to be able to engage in this ecosystem. I think these are the things that we've done. I thank you very much for listening. Thank you.
Thank you so much, Mr. Akeredoluwale, for that insightful presentation and also for shedding light on how this transition impacts the commodity space. Thank you. Please, participants, continue to put your questions, comments in the chat box. Thank you. So moving on to the fourth technical presentation. To give us a technical overview and market readiness activities, please join me in welcoming Mrs. Onome Komolafe, Division Head, Business Services and Client Experience, CSES PLC. Thank you. Over to you, Mrs. Komolafe.
Thank you very much, Safina. Thank you very much, Safina, and good morning to the team. All protocols duly observed. I will be sharing my slides very quickly. Okay. I hope we can see the slides, Safina, please. Thank you. We'll quickly go through this presentation. I will be speaking about the technical overview and market readiness. I see that certain questions have already been received on the chat and in the Q&A in terms of some of the matters that I'm addressing in my presentation. I will try to speak to them as we go along. This is the outline. The good thing is that I think mine is the last technical presentation, so a lot of speakers have spoken to some of the things I'm going to share here. Many thanks to the Executive Director, CSCS, for the overview, and also to Mr. John Ali. Thank you, sir. You have covered some of it, and also Chinwe, thank you. The last presentation from Mr. Ale was almost very similar to what I'll share. So thank you, sir. So very about the steering committee. So there's a steering committee that has representation across the market. It's a 13-member committee, and the representation is listed on the slide. This committee has been working to ensure that this transition is as hitch-free and seamless as possible. So part of the focal areas are the 6 listed areas. The first is around the stakeholder alignment. We wanted to be sure that everybody in the market, every stakeholder is on board in terms of a shared understanding of what we are supposed to do. There's collaboration to ensure that this transition is as seamless as possible. Also, a market assessment was done by the committee in terms of to review the as-is position. We are currently on T+3. What are the current challenges? What are the opportunities as we move on to T+2? That market assessment was also done by the committee. and then a stakeholder impact analysis. When we move on to T+2, what's going to be the impacts in the market on stakeholders, on investors? That analysis was also done. And then a global practice review. Where is the markets, capital markets moving to globally? Very much, many thanks to Mr. Ali again. What are for their time and their resources, in terms of the work done. I listed 6 items in barely 6 or 7 seconds, but I can assure you that this has taken a lot of resources from committee members. Just to say thank you to everyone that has been part of this up till now. Thank you. And so we go on to the limitations of the T+3 settlement cycle that we have today. Why do we want to go to T+2? What are the limitations of T+3? First, when you have a longer settlement cycle, what that means is that you have higher risk, higher counterparty risk that the counterparty may fail to deliver, increased settlement credit risk, because again, the time is longer than, and so gives opportunity for that. There's also reduced liquidity, very related to capital inefficiencies, because again, the longer the cycle, the less the availability of capital and liquidity for a more robust market. And the operational inefficiencies, when you have a longer settlement cycle, you are not able to take opportunities around operational efficiencies. And so a shorter cycle gives avenue for you to explore efficiencies around technology, around people and resources. Again, you also look at the limitations around the exposure. The longer the cycle, the more exposed the market is to volatility, and therefore regulatory and compliance challenges. And that also dovetails into reduced investor confidence around this. So we see that there are a lot of limitations in terms of the cycle, and that gives us as a geography, as a country, it doesn't give us an advantage competing globally. So again, when we see these limitations, it's very imperative that, there is a need for us to reduce this. And as Mr. Ademole had said, this is a first step to T+2, and eventually we're looking at sometime next year again to move to T+1 because of these limitations around longer settlement cycles. What are the global practices? In terms of the drivers for adoption, my previous slide has spoken to the limitations, and so that just clearly shows that those limitations, by curing those limitations, they will serve as drivers to a reduction in cycle to a T+2 adoption. A T+2 adoption will ensure that the market is more stable, reduces volatility, increased efficiency, makes us to be globally competitive, improve market liquidity, investor confidence, and of course reduces counterparty settlement risk, credit risk in the market. We have a list here listed in terms of where, globally, where the markets are moving to. We see that 3 markets are already on T+1. China, the US, and India, they're already on T+1. We see other markets moving on to T+2. You have the UAE, Hong Kong, Australia, Switzerland, and Brazil. So clearly, even in Africa, we have markets like Zambia and Zimbabwe that are already, on T+2. So if we want to ensure that we are still competitive and relevant in the global space, then it is important that this move is done, and very quickly too. Now, this speaks to the process in details. What will T+2 look like? The direction is that we would cut over to T+2 on November 28th this year. Now, it's important that there's some clarity on how it would look like. How would the market, today we're on T+3, a lot of us are familiar with that process, especially the stakeholders, the brokers, the registrars. So it's important, the exchanges, of course, it's important that we detail this. What will the T+2 process look like? The trade day process basically would be the same. Trades are executed on the floor, files are matched, and confirmations are made between the exchanges and CSCS. Then there's the first report, which we are all familiar with. We call it for your information report. The first settlement report is distributed to participants. That is on trade day. That's on day T. On T+1, settlement banks are expected to escalate unfunded positions to the CSCS for default resolution. Remember that our market is a no-fails trade market, but we already have, as we are all aware, we already have a mechanism for default resolution. And so on T+1, unfunded positions are expected to be escalated to the CSCS by the settlement banks. And then also, the final settlement advice is sent to all participants, the banks and every other participant that receives. That doesn't change. And then CSCS will upload the final advice on the NIPS portal for net cash settlement. That is done on day T+1. Then on day T+2, settlement happens across the various platforms. NIPS will process the net cash settlement based on the instruction received from CSCS on T+1. CSCS will process securities settlement, and the settlement banks and dealing members will process gross cash payments based on funds that have been received from NIPS. And then on T+3, post-trade transactions, post-settlement transaction in terms of uploading, and T+3 will be uploaded and it will be accessed on T+3 by the registrars and other stakeholders in terms of these advices for the market. So you would see that most of the transactions, we have collapsed them, if not all, into T+1 and T+2. In this instance where we are moving from T+2, I've also said that this is earmarked to be on November 28th. Now, what are the technical gap analyses that have been done in terms of how do we close the gaps? Because you need to be able to analyze what you are doing today on a T+3 basis to be able to see what the gaps will be when you move on to T+2. And so we have done some gap analysis. And when I say we, I mean the committee that is responsible for this with representation across the market. So there are system functional changes. What are system functional changes is what I would, from a layman point of view, refer to as front-end changes. Situations where you are changing the file from a the trade file from a T+3 to T+2. System technical changes will refer to more complex changes at the back end system-wise around API integration with the exchanges being made to read T+2 and not T+1. There are also timeline changes in terms of what will happen and when it will happen. So there's no more T+3, for example. So those processes and things that will happen on T+3 would, of course, be impacted by timeline changes because we will need to move them to T+2, T+1T. And then also, lastly, there are certain processes where there will be no changes at all. So the first process that is listed here is in terms of trade execution. That is marked X. That means there is no change in terms of the process for trade execution. There's no impact. We move to T+2. There's trade execution will still happen on the T. Trade matching, the same thing. There's no change. Preparation of trade file, there is no change. Trade confirmation, there's no change in terms of the process and from a technical point of view. Now, in terms of the exchanges sending closure advice and trade confirmation, that would happen on DT, and that there's a change, there's an impact on that. End of trade processing, there's no change because it will happen on DT. And FYI settlement advice that currently happens on DT today will still obtain in T+2. Now, the escalation for unfunded position, escalations for unfunded position today will be on a T+1 and on a T+2 basis. now that the market is on T+3. But as we move to T+2, escalations would only be on T+1. The final settlement advice would also be on T+1. Today, that final settlement advice is received in the market on T+2. That will change. So that's a timeline change. The same with the NIPS settlement advice. Again, that would be sent to NIPS on T+1. It will be effected on T+2. Net cash settlement, security settlement, settlement bank processing, cash transfers, post-settlement reporting, those would change. Post-settlement reporting will now be on T+3 instead of T+4, while cash settlement, security settlement, processing of cash transfers will be on T+2. So what we find out is that mainly the workflow will be maintained, only certain changes around processing timelines, and then the participant responsibilities will remain unchanged. Total time has been reduced from 96 to 72 hours. 72 hours in terms of a T+3 because processing end on T+3, but you know there's post-settlement reporting, which today makes it to be a 96-hour process. But when we move on to T+2, it becomes a 72-hour process, including post-settlement reporting. To also be able to look at what the risk management and compliance framework is going to be like under the T+2 settlement cycle. Again, trade execution and confirmation would be on T+0, which is on day T. T+1, which I have stated before, will be for escalation of unfunded position. It is expected that settlement banks will escalate any unfunded cash settlement position to the CSCS on or before 8 a.m. It's also important to state at this point in time that our market is a pre-funded market. So we expect that such escalations will be very rare and far between, not something that will happen frequently. And the CSCS would engage the banks and the defaulting participants on T+1. Unfunded accounts as at 3 p.m. on T+1 will be considered a default. Default resolution, we would maintain the same default resolution process that we have, but default resolution 2 advice to CSCS, advice to members, and engagement with defaulting members. The structure for the settlement guarantee funds is unchanged. The settlement governance structure is unchanged. The reconciliation between CSCS and post-trade members remain unchanged, just a timeline difference by 1 day. And then we will still maintain the same level of compliance reporting to the SEC by the CSCS. The pre-funding rule remains in place to mitigate against failed trades. Now, this slide speaks to market readiness activities. What are we doing? How are we engaging? How are we ensuring that when we move on to T+2 in November, there will be no challenges? So we are currently on doing from an test environments have been prepared. It's a full cycle test that I've said, and there's also some level of stress testing, not just in terms of processing, but in terms of stress testing from a high volume value of trades, just to make sure that there is a readiness check and a readiness confirmation to the market. Second thing is also the stakeholder engagement. This webinar is also one of the engagements that the committee has been working on, and this is one in a series of webinars that the committee will be sharing with the market and will be engaging to collaborate and, have conversations on how and what we can do better before November. There will be webinars. There's been a lot of social media pull around this initiative. We have regular steering committee meetings. Also, to very quickly state that we have different work groups within the steering committee. There's the legal work group, there's the technical work group, there's a testing work group, there's the awareness work group, and there's also the risk work group as well. So there are different work group, just sections to different aspects of this project. The target, I would say, we have everyone listed here, but I would say that the target is everybody in the Nigerian market, including investors. We all need to be engaged. We all need to be ready for the November cutoff to T+2. Now, this speaks to the timelines and milestones because it's also important that we know what is going on and where we are from a project point of view. Where, as you can see from this timeline, we are currently at testing stage. A lot of us here, our institutions are part of this testing process. So we are currently in September, we're doing the testing. By October, we expect that all sensitization will have been completed in terms of webinar, advertisement in newspapers and all that. And then in November, we would go live. And then do a post-implementation report in January. So what you have here are the timelines and the milestone on a very high level basis to be able to show how much work has been done, where we are, and what still needs to be done. This is also presented as a Gantt chart, again, just to also show us in terms of where we are and what still needs to be done. Thank you very much.
Thank you very much, Mrs. Komolafe, for that comprehensive overview and for walking us through the technical readiness journey. Thank you. Now we move into our Q&A and stakeholder engagement segment. This is your chance to share questions and perspective with our distinguished speakers. Please continue to type your questions in the Q&A box. I will read out selected questions for our panelists, ensuring we hear from different perspectives. So the first question. So there's a question from Mr. Samad Kazim, and this is addressed to the CEO of NGX. So thank you very much, Mr. CEO. Your presentation was clear and insightful. My question is, if we should look at the NGX, the highest and the lowest percentage a stock can gain on a single day is 10%. With the T+2 settlement cycle coming up, we should see more faster transaction process, which means we could see more stock hitting the 10%. Is there any way the exchange is trying to increase the price limit so that investors could enjoy a more efficient trading? That's for Mr. Jude.
All right. Thank you very much for that question. One would have thought that perhaps you were a fly on the wall at our last ESCO meeting, because that was really what we talked about. That
we can't hear you, Mr. Jude.
Okay.
Okay.
All right. Thank you very much. One would have assumed that you were a fly on the wall during our last ESCO meeting, because that was essentially what we talked about around the commercials of trading, especially as the NGX is also working on some innovations around trading time and duration. And so it's a subject that we have started considering, and we moved from 5% maximum trading to 10%, and given the sort of liquidity we're seeing now, and to improve the commercials and trading duration, that subject is something that exchange will look into, obviously with the approval of the SEC. Thank you.
Thank you, Mr. Jude. And I hope Mr. Samad is able to answer your question. Thank you. So another one. So this question is from Afisu Muritala. Educative presentation so far. From the discussions, I learned the tentative date for the change of the settlement days is to T+2 is November 2025. But I heard that there are plans to move further to T+1 by next year. So his question is, why the rush to move to T+1 next year? Why can't we test the impact of moving to T+2 on the stakeholders, investors, and the market? So that question, I'm going to address that to Mrs. Komolafe. Thank you.
Thank you very much, Safina. Yes, the plan is to move to T+1 in next year, but I think what we have not stated is that it is expected that that will be 6 months after implementation of T+2. Again, that would enable us to be able to assess the impact of the T+2, look at the risk issues involved, see if they can be resolved, and if they are resolved, then consideration will be given to that T+1 change to T+1. So yes, there will be some level of assessment before we move to T+1. I hope that answers it.
Thank you, Mrs. Komolafe. So the next question, and this is to Mr. Bola Jumale, the regulator, and this question is from Olu Oshineye, BNP Paribas. So he said, as the regulator, is there a deadline in place for all the market participants to confirm they are ready for T+2? Did all the participants confirm? And what happens if any of the market participants are not ready to go live on the 28th November? Thank you.
Okay, so yes, we had various meetings, numerous meetings with the stakeholders and CSCS. A committee was put in place a few years back, and the committee had been working non-stop, sensitizing and testing and interacting with all the stakeholders over that period. After it was concluded, we then had a larger meeting with all the trade groups represented, and they affirmed on behalf of the members that they will work towards that date. That is when we actually set the date and the program that will lead us there. What happens to any operator who is not ready? That means that operator is not ready to operate in the market as it now operates. In which case they will not be able to participate in the market. It is a hard date. It is a switch that will happen. It's like saying, what happens if I am not ready to move on to a new system? Then you don't move on to the new system. That's what happens. There was a second part to that question. Was there a second part to that question?
Hold on. Yeah, he said, okay, okay, I think you've answered it because
I've answered
the
both,
second
right?
part was yes, please, you have.
I did see a question though saying, why don't we move to T+1 immediately? And the reason why we don't want to move to T+1 immediately is because we don't want to disrupt the market. What we want to do is improve the efficiency of the market. You can improve efficiency either by shocking it or by moving it gradually. We prefer to move gradually. As Ms. Komolafe said, test, see that it works, see that everybody's on board, see the effect of it, and then move into the next stage.
Thank you. Thank you, Mr. Jumale. Yeah. Okay, so the next question will be for Ms. Eke. The question is from Kunle Razak. He said, when will NASD OTC stocks be available for trading directly on stockbrokers platform?
Okay, thank you for the question. So we already have the technology to support that, and we have a lot of brokers, their platforms already onboarded on the service. If you could reach us on our support emails or lines, we could get to know which of the platform specifically you're having that challenge with, and then we can take that up for you.
Thank you. So another question, and I think this is also for Mrs. Komolafe. So the question is, so there's a comment. Glad to hear testing has commenced. Have there been any issues coming to light in terms of the testing? Does the testing include all the custodians? And how long will the testing last for?
Okay. Have there been issues in terms of the testing? Yes, that's why we're doing testing. But most of those issues are more related to infrastructure issues around network and links and all that. So not major tests related to the reduction in the cycle per se. Does the testing involve all the custodians? No, we have select custodians. But again, we made it open for anyone who would want to join. Part of the steering committee membership is the custodian community, represented by 2 people. And so that's very open for anyone who wants to join. There's a third part to the question, Safina. Is there?
So I said, how long will the testing last for?
Or how long will it last for? Well, the plan is to continue to test. So we will do a test as tests goes, and then we would check until we get to 100% in terms of the output. We would continue to test. But so far, I think a first test had been done, and I'm very happy to report that that was at almost a 95% in terms of feedback. But we are doing another test, and we expect that we'll get 100% at this time.
Thank you. So this question is also for you, so maybe you should just stay on the line. Yeah. So the question is from Samad Kazim. So he said, brokers, custodians, and clearing firms need to upgrade system and processes to ensure smooth T+2 operations, which can be very expensive. Is there any way or requirement CSCS is given to these agents to ensure smooth transaction for investors?
That's for who? For the brokers? Sorry, I didn't get that.
So for brokers, custodians, clearing agents, yeah.
Everybody. Okay, so we are supporting the test. Again, I think maybe in my earlier response, it seemed like it's a never ending. Just to say that based on the project timeline, tests will end September 23rd. Just to put that very clearly. But in terms of supporting the market, CSCS is very, very happy to support. I personally also engage, and a lot of the team within CSCS, we engage various stakeholders around issues or challenges that they would have. I also noted that there's a question around if the OMS vendors are part of this. Definitely they are. The expectation is that the OMS vendors are working with their clients and engaging so that this will be seamless. I would also stated in my presentation that some of the changes are more technical than others. So when you have an API change, which is more technical, you would need to engage the exchanges. You need to engage wherever you have an API with to say that there are changes from T+3 to T+2. So the support system is there. Also to say that within CSCS, this project is clearly very much on our own project management dashboard and supported fully by our project management team within CSCS as well.
Thank you. Please keep your questions coming. So another question, and this is, okay, second question from Mr. Olu Oshinaye. His question says, is there a post-implementation group? No, let me rephrase. Is there a post-implementation group in place that can provide an oversight role, identify issues and recommend changes to remedy these issues following the go-live date of 28th November?
Should I go ahead?
Please go ahead. Thank you.
Okay, so what we have, again, we have a steering committee, and then we also have different work groups or subcommittees. Part of what part of the assignment for every work group is also to do a post-implementation review. If you remember in my presentation, in terms of the work plan that I had shared, there's a post-implementation review that should be shared in January. So yes, very directly, yes. from the legal to the technical, there is a post-implementation review that would happen post-go live, and the report is supposed to be available by January. Again, very key to state that part of the transition to T+1 is to ensure that post-implementation of T+2, all issues have been resolved, all stakeholders are on board for T+1. Thank you.
Thank you, Mrs. Komolafe. Thank you. So I'm picking again. So there's a question from Latif Yusuf. The question goes, what adjustments will institutional investors like PFAs and fund managers need to make in cash management?
Okay. To start for me?
Yes, you can. Yes.
Okay. So again, what we have seen and what is clear across markets that have implemented this is that there will be more liquidity in the market because now you have a shorter cycle. So in terms of cash adjustment, there's more liquidity. But on the other hand, again, because the cycle is shorter, you are also expected as a counterparty to make funds available before the settlement date. The market is pre-funded, but again, in reality, sometimes you find people don't really pre-fund. But now, if you are not even pre-funding, it is expected that you have funds available by T+1. The mandate to the settlement bank under the T+2 settlement cycle is that defaults should be reported by 8 a.m. on T+1. So clearly, we are very strong on the pre-funding and maximum funding on the T. So I think that from a liquidity management position, that should be considered. But again, the upside to that is that your funds are more available to you faster from a T+2 than a T+3 that you ordinarily would have. So there's more liquidity, more better optimization of capital again for the PFAs. Thank you.
Thank you. Please keep your questions coming. So there's a question from Latif Yusuf again. Will clearinghouses CSCS, no, let me see, will clearinghouses CSCS take on, will TSCS take on greater risk exposure under T+2?
Directly, no. We still would maintain the same settlement framework, settlement default framework that we have today. So we don't believe that there's a greater risk exposure to us in CSCS or even to the market. Thank you.
Yeah. So another question. I think Mrs. Komolafe, you are just on the hot seat today. Another question for CSCS. Will CSCS ensure, this question is from George O. Will CSCS ensure that all daily shares purchases are mandated immediately to the nominated bank account to avoid form filling with registrars that leads to unclaimed dividend and frustrate investors?
Okay, so just to take us back on that question, CSCS, there are two options in terms of how settlement is done today in the market. It's either settlement is done through your broker or settlement is done direct cash settlement, i.e. you would advise on your cash, you advise your bank account to CSCS and settlement will be done directly. So, and the SEC has really done a lot of positive campaign encouraging the market to take the option of direct cash settlement. So if this is a challenge or an issue for any investor, I think the option of direct cash settlement resolves it very quickly. Again, around unclaimed dividend, I think that's a different kind of conversation because what you find with unclaimed dividend is the fact that these account numbers are not available. And I think that is not exactly related to the reduction in settlement cycle conversation. But in terms of getting your settlement done almost immediately on T+2, either you do it with the broker, CSCS would advise NIBS on T+1, NIBS would affect settlement by 8 a.m., 9 a.m. on T+2, and so you would get settlement once you have the account number, whether with your broker or directly with CSCS. Thank you.
Thank you, Mrs. Komalafe. Please keep your questions coming. We still have about 6 minutes for this session. So I've actually got a question for you, Mrs. Komalafe. What were some of the biggest challenges CSES faced in driving readiness for T+2?
I think that we've received a lot of support from the market. So top of my mind, I can't immediately think of any challenges. Again, maybe because this is a conversation that's been going on for about 2 years. I think that a lot of participants probably we need to just communicate that this is not a conversation that started in 2025. So a lot of work has gone in. We've had so much support from the market, from every segment of the market. Every group in the market has been very supportive. So in terms of challenges, I would immediately say that for the committee, I do not think there are any major challenges. Yes, several interest groups will bring forward what they think would affect them directly. Those were considered in terms of advising, oh, okay, should we do this next year? There have been conversations, should T+1 happen next year and things like that. I don't see them as challenges. I see them as, making the conversation richer, bringing in your own viewpoint, and then us collaborating in terms of how we resolve this. So I cannot immediately think of any major challenges that we've had. Every sector, every segment of the market has been super supportive on this. Thank you.
Thank you so much, Mrs. Komalafe. So one last question, and this question is for the regulator, Mr. Ajomale. So looking ahead, what's the next big transformation you think Nigeria's capital market need after T+2? Thank you.
So the capital market in Nigeria is going through, there are many that we're doing in transition. There is the digital transformation that is coming up. There is the recapitalization of the whole capital market that we're looking at as well. There is a move to full risk-based supervision. So there are various areas of should I say tweaking or change that will happen over the next 2 years. So this is just one of many. Listing them out. Sorry, I just put on my video. So to list them out would be might be misconstrued as prioritizing. So I will not prioritize one over the other by just listing them out ad lib like this. But I will tell you that there is a digital transformation coming, there is recapitalization coming, and there is risk-based supervision coming to the market. Normally, what we tend to do is release what we are ready to bring into the market. We release them normally at the Capital Market Committee meeting, which is taking place soon once we decide on the date. I would also add that major things that we can see coming on the market, in addition, would be the commencement of online forex trading being seen as a capital market activity. And I'll stop at that one, but there are various other products that we can see coming into the market as well. All of them, of course, empowered by the ISA. So to see what's coming next, I think the best way the best heads up you can get is to look at the ISA 2025, and that will give you ideas of the opportunities that are being opened up by the capital market.
Thank you. So I just need to squeeze this question for you. And I think it's more clear. It seems more like a clarification that is required from Mr. Olushola Oni. So he says, congratulations, SEC, CSES, and other stakeholders for the bold initiative of moving towards a T+2 settlement cycle. Just for clarity, from the way Mr. Ajomale responded to one of the questions, can we say there will be no consideration for cooling off period at the takeoff for initial challenge?
So if you have a takeoff date for a new system to be put in place, especially one that has financial implications, fiduciary implications, and settlement implications, you really do need to have a clear cutoff date. It would be wrong for us to have two settlement standards at the same time. I think that will lead to confusion in the market. Therefore, we're signaling the takeoff date for it. If on day one, and again, if 90% of the market says they're not ready by November 28th, then maybe we can move it to December 1st or 2nd, or whatever it takes for us to get to a certain threshold of capacity. Right now, we have got confirmation from all the trade groups that they are happy with that date. So if any individual company within each trade group decides that it cannot meet that industry standard, should it be allowed to remain within the industry and operate at a different standard that is below what we have set? I am not sure that is a good way to run the market. So what we are doing is telling everyone now, this is the date at which we're going to take off. Please test your systems to make sure you can comply with the standards at that time. So I'm not sure whether that answers the question, but it would be, I believe it would be wrong for us to say, well, yeah, maybe you can hold on for another 2 months before you reach the T+2 standard, but you can still operate within the market. It will lead to confusion, I believe. And that's exactly what we're trying to avoid.
Thank you so much, Mr. Jomole. And I believe that also maybe clarifies some of those questions raised by Shola Oni. Thank you. So as we wrap up today's session, I want to sincerely thank our speakers, Mr. Jomole representing Dr. Agama, Mr. Shoneko representing Mr. Jalu Waziri, Mr. Jude Chiemeka, Mrs. Eke representing Mr. Longe, Mr. Kiridolu Ale, and Mrs. Komolafe for their valuable contributions. A big thank you as well to our participants for your active engagement. Today's discussion has reinforced that T+2 settlement is not just a regulatory milestone, but a collaborative effort across exchanges, OTC markets, commodities, and infrastructure providers to strengthen our market's global positioning. On behalf of the Market Implementation Committee and the CSES PLC, thank you once again for joining us, and we look forward to your continued support as we drive efficiency and transformation in our markets. Have a wonderful day. Thank you.